Jingle bells, jingle all the way. Bears are fucked, shorts are cooked, we're headed to all-time highs. Hey, jingle bells, jingle all the way. Trend is up, what the fuck, we'll start the video right away. How's it going, everyone? Mario here. As mentioned in the last week recap, the strength did continue. S&P 500 locked in new highs. That's a 6th straight green week in a row. The trend is still positive. No reason to look at this chart and say, you know what, I'm gonna buy boots. Stay with the strength. If they pull back, those are the pullbacks in an uptrend, and which should be used as an opportunity to buy the dip instead of adding on to short positions. The trend on the daily is still bullish. The 5-day moving average is flat to positive, so into this week I'll be watching $462, the highs of 2022 April. If they take it out, the next leg towards that 470 to 473 and all-time highs is back on cards. Ho ho ho, motherfuckers. But hold on a minute. These are the bullish theses. What are the potential catalysts which might put a dent on the same? We will take a look at potential risk against this. By potential risk, what are the events that can derail this momentum to the upside? Well, we got CPI on Tuesday and we got the FOMC rate decision on Wednesday. These two events can move the markets. Hence, this automatically becomes the risk as setting proper stop losses comes into question. We either move the stop losses up on the shares which you're already holding or buy some hedges to protect the downside risk in case of a potential drawdown which we might see. If they gap up, the longs which we are holding already will be making money. But just in case if the market starts to sell off, these hedges which we opened are going to come in handy to protect the profits which we have on shares. If they take out 462 or gap up higher, watch out for the 470 zone to all-time highs into next week. In case of a downside, I'll be keeping an eye out for the 5-day moving average and the monthly AVWAP, which is currently sitting at 457 zone. Anything under will be watching that 454, the AVWAP coming from the last CPI for potential area of interest down south. Now looking into the Nasdaq, the QQQ did not log a new high this week compared to SPY, but still looking great. The daily is still in an uptrend, the 5-day moving average is still sloping to the upside, still above the positive monthly AVWAP. Into next week, keep an eye out for this 393 to 394.16 zone. If they take it out, 400s and the all-time highs at 408s will be in cards. As discussed with SPY, the risks to derail this momentum in Qs is the CPI on Tuesday and the Fed's FOMC on Wednesday. We'll see how the price reacts after the data drop and manage the positions accordingly. In case of a downside risk, there's multiple confluences at that 388 to 387.50 zone down south. We got the monthly AVWAP, we got the 5-day moving average, we got the AVWAP coming from the lows of 382. Until they take this 387.50 out, there is no reason for me to look at these charts and go, I'm gonna buy more puts here. We'll go over some of the trade ideas which has been shared for the Patreon members last week. We're still holding some positions on UPWK, still a great looking chart. The daily is still in an uptrend with positive 20-day, 50-day and 200-day moving average. The price recaptured the AVWAP from the ER candle and the price is still consolidating in a bullish pennant. Recaptured the 5-day moving average in smaller time frames and the close on last Friday was pretty good. If they take out this $15 zone, this will be off to races. We were already positioned on this with stop losses at $13.50. If they crack under or close daily candles under this price, we'll cut this position for a small loss. If not, the target stays the same at $15 for the first cut and the next one towards that mid $16.50. If you want the real-time updates on trade ideas like this, check out the Patreon, the link is down below in the description. We got a small position on SOFI as well last Thursday. They're constantly rejecting this AVWAP coming from the swing highs from July 31st. I like the consolidation under the area of interest instead of a nasty rejection and a drawdown. We got a good risk to reward setup here. If they push higher above $8.30, we can see this push all the way towards that potential $9.40 zone, which is where we will cut our entire position for 3 hours. The stop losses on the same trade is currently at $7.70. If they cut under, we will close the same position for a small loss. If not, there is no reason to make any changes yet. The next trade is FTDR, front door. This is another long in the portfolio. I like the basing on the daily chart. The daily is still in an uptrend above the positively sloping 20-day, 50-day and 200-day moving average. The stop losses on this trade is currently at $33.80. If they break under that, we will close this trade. If not, watching for that $37 followed by the $39 up north. To summarize, we got 2 risk events into this week, CPI and FOMC, which can move the markets. If I make any changes to these positions, I will update to the members as usual. If you're working 9 to 5 and can't focus too much on day trading, check the Patreon out. If you want to book a one-on-one, the link is down below in the description as well, along with the mentorship programs. That being said, take our probability trades, manage the risk wisely. I'll see you guys in the next video.